How are we getting on, people? Luke here from LAGFX. I hope you're all okay. We're back today with another Sunday sessions video. I've got 3 Forex markets that I'm going to run you guys through, giving you guys my analysis, my rundown on the market and how I'm looking to tackle it. And then what I'm going to do is pass you over to James and he's going to do the same. If you're not involved in the Learning Lounge group chat, be sure to get involved. It's completely free of charge. Simply go to the link in the description and you'll find our Learning Lounge group chat there. And if you haven't signed up on our website, be sure to do that as well, as we are constantly offering free memberships and loads of giveaways. Now, without further ado, let's jump straight into my analysis and give you my rundown on the first market. So the first market we are going to look at today, as you can see, is the AUD USD market. This is going to be very quick and very brief. As we know, this is something I've been wanting to get involved in for some time now. We have basically been waiting for price to finish its bullish retracement before taking its bearish leg lower. As we can see, we have our point of interest marked out here. So I'm wanting to see all of this inefficiency be filled, which it has been. Now, all we are looking for is a tap or penetration of our zone. Once we have that, we then need to wait for some kind of break of structure. Once that has been delivered, we can then look to be involved in the market and look to execute those sell positions. So just drawing a path out so you guys can see exactly how I'm wanting to see price play out. So we have, some structural lows here. What I'd like to see is price come up, tap into the zone, come lower, breaking this previous bullish structure, these protected higher lows. So breaking structure to the downside, then presenting us with clear bearish structure, so a lower high to be presented, which would be confirmed by a lower low. And then we can look to get involved in the market. So I'd look to get in somewhere around here, and then we can ride price lower, getting involved in this next impulsive wave down. As I say, it's been very quick and very brief analysis on this pair, but it's as simple as that. I just want to see price tap into that point of interest that I've got marked out, and then we can look to be sellers in the market. So this is an opportunity that will be presented to us within the coming days. I'd imagine by the end of Monday, Tuesday, we should have a position that is worth placing on this pair. Now, moving over to the Great British Pound to the Japanese Yen market. As we can see, I had a higher time frame point of interest here that I wanted to see price penetrate, show signs of rejection, and then we can look to get involved. We had exactly that. So we have had the penetration, the rejection. As we can see, this has clearly rejected that zone, and we've since seen bearish structure being presented. We've had fractal breaks of structure to the downside. Obviously, it'd be nice to see a break of structure down here, as this would indicate a longer term reversal and the next impulsive wave to take place, essentially. But nevertheless, we have still been presented with some opportunities to get in on entry positions. So I had a last buy to sell here, and I had another one here. Obviously, this came and knocked us out as it penetrated through the hour zone. If we just move this across, we can see obviously it penetrated through, but this has held. So this is still a valid zone. What we've seen since is price break structure fractally again to the downside, but price has continued to trail us back higher. So for me, I was looking for areas that were left unmitigated, anything that was worth, price coming back to tap into, and I've found a zone here. So it'd be interesting now to see how price plays. But again, come Monday, obviously the markets are still open for the next 45 minutes, but come Monday, we should see some clear rejection from this point, and we can look to get involved in the market again on those longer term sell positions. So for example, let's just say we have a break in these lows here. That would be enough confirmation for me to look to enter. So if I just draw a path out, I'll show you exactly what I'd like to see. So price to come down, breaking these lows, that would be great. A lower high to be set, show signs of its next impulsive wave essentially taking us lower. And if we have that via a break of structure somewhere up here, that is when I'd be looking to get involved. I'd have my short position placed. We could even have our take profit just set above the previous protected highs, or we could have it set just above the new protected high that gets created. And then obviously we had our take profit set all the way down here at the major swing low. As we can see, this is offering us some crazy returns. So if we can get a really refined entry, we will have a brilliant risk to reward return. As we can see here, a 1 to 48, that would be amazing. Now, obviously trades like this don't come around often, but I don't see why we wouldn't be presented with that structure and why we wouldn't be able to get involved in this market as I've predicted. So again, look for those sell positions come Monday on the Great British Pound to the Japanese Yen pair. Hopefully we will see a continuation in this bearishness and we can get involved in those sell positions. Now finally, moving over to the Euro to the Great British Pound pair, we can see, if we zoom out, we will be able to see that this market is predominantly bullish. So we want to be looking for those buy positions in this market. It's a given. So what I have done with my analysis is try and find those buy positions in order to get involved in the impulsive swings that take us higher. So we have just recently had a clear higher time frame retracement that has taken us lower. And what we have seen as of recently is now a break of structure to the upside, which is basically indicating the start of the next impulsive wave. So first we had a break of structure to the upside, breaking previous structural lower highs that were set in the market for the bearish retracement. So we've had a higher high get created, and then we've also had a higher low. So this is clear bullish structure, and as we can see, this has continued. Now what we have seen is a dip in the market, and I think this was just grabbing liquidity that was left remaining here, and we should continue to see bullish structure present itself throughout. So again, we want to get involved in those buy positions. We need to look for the best opportunity to do so. So personally, what I will be doing is come Monday looking for any areas at which price could pull back to before taking its next impulsive wave. So all we need to do is look within this impulsive wave and try and find areas that have been left unmitigated for price to come down to, tap into, and then we can look to get in on the next wave that takes us higher. If not, it would just be a case of waiting for an opportunity to present itself. So for example, if we don't go based off areas that have been left unmitigated or any inefficiency in the market, we would quite simply just want to see bearish structure present itself and then have a break in that bearish structure. Then once we have that break in bearish structure, we can then look to get involved in the market, because what we are doing is basically just following structural laws. And as we know, structural laws are extremely important in the Forex markets. So that for me is enough confluence in itself. So as soon as we have bearish structure presenting itself and then a break in that, giving us that suggestion that price is now ready to take the next impulsive wave, that is when I'll be looking to get involved. Wait for that pullback, find that area of unmitigation within the first impulsive wave that takes us higher, and then that's when I'll look to execute my position. So again, just to summarize on this pair, I am looking for those buy positions. We just need to wait for the right opportunity to do so. So if you aren't involved in the Learning Lounge group chat, as I said before, get yourself involved, because what I do is I explain my analysis on a Sunday sessions video, and then throughout the week, I update everyone in the Learning Lounge group chat of my analysis and let you all know exactly what price is doing and how I'm looking to tackle it. Now, I hope you've enjoyed my analysis today. We've gone over the AUD USD pair, the Great British Pound Japanese Yen pair, and the Euro Great British Pound pair. I hope you can take my analysis away with you, implement some of the things in your analysis that you have watched today, and profit next week. If you have enjoyed the video so far, don't forget to leave it a like. Now what I'm going to do is pass you over to James, and he is going to run through his analysis and his setups for the coming week.
Hey everybody, I hope we're all doing well today. So once again, I'm going to be starting off on the Euro US dollar. Shock, I always do it. Hope you have enjoyed Luke's analysis so far. I do agree with a lot of the analysis he's done, and he is looking at some brilliant setups this week. So I wanted to actually take a slightly different approach this time to what I usually do, because one thing me and Luke have always stressed to each other, and we've always spoken about, is the tough thing with a lot of the people you see on Instagram and other traders. I'm not saying they're not profitable. I'm not trying to say anything bad about them, but those people who use a lot of indicators on their chart and they clutter their chart, whether you use indicators or not, if you're cluttering your chart, you're typically just taken away from the core principle of just viewing structure for what it is and for how it is, and understanding what that structure is telling us through the laws of structure and the laws it must follow. Now, what I've done here is I've actually gone onto the Euro US dollar without any drawings on whatsoever. And we're just going to slightly talk through what the structure alone is telling us in terms of all of the conceptualizations that I use and how I'm going to use my analogy and bias that I will gain from this to then go on to my markets and explain more in depth of what I'm looking at. So, I mean, it goes without saying, looking at where we are right now, we are bearish. If we take a very quick look on the higher time frames, we know that for a very long time I've been expecting for price to come and break this low. And as of, I guess, around a month ago, I would say, is when we really got that break. So now that we've broken this, we can argue that at any point moving forward, we could create a correctional wave, because obviously we know that impulsive waves, we just want them to break the previous swing in the market. So in a bearish trend, we want the previous swing low to be broken, as that is our final target. We've now broken that. It doesn't mean price is going to suddenly just reverse right now. It's just saying that we have achieved the target we wanted to achieve. So dependent on how much supply is left over in the market is a good indication of how much longer this trend will continue. But doing a very quick supply and demand analysis in this market, we can see that we're pretty much just having very volatile, very sharp pushes down, which is a great indication that we have a lot of supply present. The retracements or correctional waves are quite shallow, and we're seeing a lot of redistributions rather than deep correctional waves. So in my eyes, there is still a lot of supply, and there probably should be a lot of leeway still for this overall bearishness to continue lower. But actually doing what I stated and looking inside of this, we can see a lot of price cycles in this market. Just starting from up here, we've had obviously an impulsive wave. If we just draw this out, correction we've seen here is a perfect example of a redistribution. Look inside of that fractal structure. This fractal structure has been broken, but it's been broken for the purpose of us coming up to actually tap into a buy to sell in here that was left unmitigated. We perfectly tap into that through the use of a Wyckoffyan distribution. Within that Wyckoffyan distribution, we have then introduced a lot more supply into the market, which has then caused us to have another leg lower. So some more bearishness. We get that brush tool, come lower. Obviously, we break this low, so we confirm that we are going to continue trading lower. And this, at the same time, then becomes a protected high. But again, looking at the structure, apologies, that we currently have, we're now trading down. And looking at this from, like, as I said, a price cycle sort of standpoint, so we've had an overall market distribution here. This sort of like a redistribution, we're trading down. And it appears that if we actually zoom into this region, especially on like a 1 hour, it does seem like a very early sign of an accumulation in the market. Now, what is backing my opinion on this is the fact that, as you all know, with Wyckoffyan schematics, because I use them for entry confirmation, there's sort of a list that you want to see. Now, the first thing is you want to see liquidity built within phase A. We've seen that. We've seen a lot of rejection from this region, and one area in the market where we've had that rejection from, which is where a lot of retail traders are going to be looking to buy from. We then see a high volume push through that. So we've got a nice indication that there is some institutional control present. And then what's going to happen after this is we're just waiting for that market high, because within, if we were to follow the fractal bearishness, we've had impulse, retrace, impulse, retrace, impulse. So as of right now, the market and price is still technically bearish until we've had a change of character at this level. So the second that we have a change of character here, that is confirmation that we have seen a accumulation in the market. And if so, we're saying that looking at this in terms of a price cycle, we've now had our accumulation. So we're then looking within this entire trading range. So from this protected high and from this region, and we can say that price is going to have a correctional wave up anywhere between where price is as of current to this high. Now, what we're going to do there is we're going to look inside of this point for any regions where we think that price may react to. So the first one that my attention is drawn to is buys to sell in this region. The reason why I quite like this is because we have a lot of inefficiency in this region, which is likely going to want to get filled before anything else. And then also looking at positions higher. So we do have a position in here, I'd say, There could also be irrelevance. I'll go and refine these in my own time, but these are just the loose sort of regions in the market I'll be looking at. As I said, I will be looking to refine those in my own time, however. And there's obviously going to be something inside of there, again, that will get refined. So these are the three major points in the market that I'll be looking at. We can see that that buy to sell was already mitigated prior by that wick right there. So they're the three regions that, in my eyes, if we're going to give ourselves a nice deep correctional wave, should get mitigated. Through the refinement process, I may decide that one or many of these aren't actually valid. But if this is an accumulation, I'm going to expect quite a lot of demand to be introduced in the market. And therefore, I think we should at least come to mitigate the lower of these three zones because, as I said, we have a lot of market inefficiency here. And on top of that, this seems like quite efficient structure, and it doesn't seem like there's any obvious prevailing supply zones left over there. So that is my current outlook on the market. Just looking at that structure for a minute and then diving into that and saying, right, what is that structure telling us and how are we going to trade the market moving forward? So this is my bias. It seems like we are giving early signs of accumulation. It's not confirmed yet, so we might not be reversing right now. I could be incorrect. However, we need to see how the euro and how the dollar performs in this coming week. If we see the dollar depreciate, obviously that's going to help back this move. If we see the euro appreciate, that's going to help back this move. So it sort of just depends fundamentally if we do have some driving force to help this desired move happen. If not, there's still always the chance that we just see the dollar appreciate massively and it doesn't have enough steam to continue this move, and therefore we continue lower. If so, as of right now, there's no nice tradable structure within this, so I will just be trading price if and when that does occur. So that is Euro USD. Let us take a look over at Australian dollar to the US dollar. So I was actually rearing up for a very nice potential sell position on this market last week. We see that, again, in this market, we've been following bearishness for some time. Looking inside of here, this was pretty much the only unmitigated buy to sell or supply zone in this region. Price came up to it, created a lot of liquidity below. We induced sellers down into sells by having this change of character lower. We then tapped up into it. And on this region on a lower time frame, you can see that, I'm not sure if you see by this candle, but we had liquidity built, high volume move to below liquidity, and then change of character through that wick. I actually got involved in one position there because I was delivered all three steps that I need within my entry confirmation. Unfortunately, price never actually went through with that. We see it actually blew through the zone and has disregarded the bias. So that was a -1 RR. However, it does give me a lot of information on what's happening with this in the future. The fact that we've blown through that means it's very likely now that we're going to give ourselves a correctional wave, clear some of the liquidity in this region. I'm not really seeing any zones in this region in itself. And what I am liking about this point in the market is pretty much all of these highs right here are representing liquidity in the market. And if we're going to start invalidating some of the liquidity down here and showing signs of reversal, then this is definitely going to be a target for the institutions because they see this entire region as just concentrated area of liquidity that they'll probably want to run. So my bias here is probably going to have a bit of demand in the market for some time as we run this liquidity. Whether we have enough demand to come all the way back up to mitigate these positions, I don't know, but I'm just going to be looking to see price trade up, clear as much liquidity as possible, either wait for price to trade all the way up to these supply zones, or if we want to trade in the short term, just finding ways to then start getting involved from demand zones on that bullish move up. We'll now head over to pound yen, which again has been another brilliant market in all fairness. I was actually looking to take sell positions all the way back here, so pretty much coming up to 3 weeks ago now, where I knew that we, just looking at it fundamentally, we probably were going to make a move lower. I said that after we have that major change of character, even if you go back and look at the videos, you'll remember me saying that. We had a lot of volatility introduced to that side. We came back up, mitigated another impulsive wave, and then we came back up, another correctional wave to mitigate this zone perfectly. And then we've then tapped into that, had a lot of consolidation. We tapped into the original zone, had some changes of character, started running liquidity to the downside, showing signs of the reversal and creation of bearishness. As of right now, we are pretty much range bound, so obviously the market's trying to decide what it wants to do, but there are still some zones that we can look to get involved with. I think I did actually look to get involved again on this market in this region, where you can see I had liquidity. Liquidity was blown through, change of character. That was another -1 IRR there. Again, I followed everything, all steps of my strategy perfectly. It just seems that as of right now, we have been following longer term trends, and we're potentially at a point in the market where the market makers and the institutions are sort of undecided because of what's happening economically, whether to continue these heavy moves lower or actually give us a move higher longer term. So it's unfortunate because that was just me getting in on the back end of that trend, and we just need to see moving forward next week. And next week will be a nice gauge of what the markets are actually doing, whether we're following this trend that we've been following for weeks now, whether we are potentially going to give ourselves some correctional waves and go to run some liquidity. So that is my bias on a few markets there. I hope you've managed to take something away from that. I hope you've actually managed to take some of the knowledge I've given there into your own bias and maybe implement some of the strategies I use myself into your own analysis. Let me know what you think in the comments. Let me know if you agree with any of this or what you're looking at on these markets. It's always nice to see what other people are looking at. But overall, hope you have enjoyed this, and we will see you again next week in our Sunday sessions video.